Welcome everyone, we are back today with Michael Toma, who came to visit for a couple of days. We want to record some videos here for you guys on a few topics. And today we talk about our best setups, things you like out of the market, things that we use every day, that we trade every day, things that you can use yourself, some simple stuff, simple setups in the market. So yeah, let's dive right in.
I can't live without them, right?
Definitely. Oh yeah, for sure. So, Michael, what's your favorite setup? What's the thing that you like to trade the most?
You know, everyone talks about like, well, what's your setup or what moving averages and what RSI and what. Here's a simple concept that I use all the time. It really makes or breaks my day, month, week, or year. Is I call what should happen doesn't. So, for example, say price, and think about just logically. If price is moving within a certain range, say yesterday's range, and it falls out of it. That says a lot. That says like, well, where it was most common and very, very comfortable, now price is exploring, okay? And there's a lot of breakout traders taking the shorts and everything like that. When price goes back into that range, everybody's hair on the back of their neck should be standing up. And you know there's people trapped because who took the breakout? Who waited for confirmation? Now they're all trapped. What's gonna happen to those trapped traders? They're gonna scramble, and scramble means cover. I wanna be the other side of that trade, taking advantage of it. It's consistent. I love it. It's very easy to detect. And it's not about a specific moving average or what setting to use. It's conceptual. It works so often. And I don't know what to do about it.
That's a good one, definitely. I see something similar with whenever you have a big engulfing candle in the market, like big like reversal candle in the market, people want to sell. And you see people sell, then price goes above it or something. And then you see all those people like that sold that candle, they're all trapped. And they want to go and like either hit the stop loss, they're stuck in it, then it just goes beyond that if it goes beyond the high. It's kind of a cool setup too, the same thing.
Yeah, I mean, I hate to say it, but like, am I taking advantage of some of the newer traders and stuff? Well, however we want to say it, but that was me 10 years ago.
Yeah.
And I was getting burned and I was, losing money. So now I realized it, and I can't push the big boys. I'm just want to be a little pebble in this game. But if certain groups of traders and retailers are going to be making those sort of common mistakes, well, why don't I just be on the other side? And the cool thing about it is it actually works very consistently. Shorts are always ready to cover when they panic. I mean, panic will never go away, I don't think. So as long as that stays intact, I'm just going to keep doing it.
What do you do then when price goes back within the range? You wait for another breakout and you want to go in the market straight within that range?
I want to wait till, I want to set up and say, okay, this is happening. A lot of traders starting to pile on, all right? That's fine. Let them have some winning trades. I mean, I'm all for that. But I'm already thinking, where are they going to start to panic, right? Now you have your scalpers, like say S&P futures, that infamous 3 to 5 points. That's when people are going to start, they usually have their stops, right? But when it's about what should happen doesn't, think about the concept. Say, and I use that as the same example, it goes outside of a range of yesterday or say, and it goes back in it. That's the first sign of someone going, I mean, think about it when you're on a losing trade. Don't you have those moments where you're like, uh-oh, like it's not working?
Yeah.
Well, uh-oh may not be sell, but uh-oh means I'm going to start thinking about getting worried or getting out. That's where I want to be in. And quite honestly, when they bail, I'm actually taking my target one. So it's kind of cool in a way, in a sense, where I'm just doing the opposite of them and taking advantage of that panic.
A lot of people, they like to follow these common sayings. You should buy the breakout. You should trade the trend. When you do something against that, then that's usually when you can make money because you're not following what most people are thinking or doing or what's natural to most people.
I mean, it works 100% of the time when it works. I mean, let's face it. And we've all done. Hey, breakout trading, think about these long bull runs. They started out with a breakout trade. Obviously the biggest test is, did you hold on to it long enough? And it's tough to do. So breakout trading is great. Breakout trading has its merits. But what happens when it goes wrong? Okay, you have your stop. Maybe it goes with a breakout. All right, where's your stop usually after it breaks out? Below the breakout.
Yeah.
That's what is it? That's almost the initial sign of panic. So when it's on the breakout and it's not working, I'm thinking, and where the other guy's thinking, uh-oh. Uh-oh to me is trigger. Where they bail, that's my target. It's really kind of a simple concept, and you just get used to it after a while.
Would you trade within the range then, or will you wait for a different breakout to appear?
I mean, generally there's a lot of other factors go into it, but I will generally be more anticipatory. That's sort of the risk on my end. Breakout's easy. Buy at the breakout. I mean, it's kind of a simple concept. I'm taking a little extra risk and saying I'm anticipating something to fail. And if it doesn't, that's fine. Let the breakout trader, make his money, and I live to trade on it another day. But as soon as there's sort of hesitancy, that's where I'm sort of getting interested. So yeah, I'm going to anticipate, not wait for it to break out, whatever. So what should happen doesn't. It's more about what should happen. Does it look like it's happening? That's where I'm entering.
You have any other favorite setup? Other things you like to look for?
Yeah, I mean, the other ones too is, and just to follow up on that, think about where my stop is too. If I'm wrong pretty quickly. It's working out for them. That's okay. Let them have their day. I'll get them back, because those type of styles will never work. But what I'll use in these what should happen doesn't is I love using, particularly in equity type trades, whether it's equity indexes or equity stock, is I like to use a New York Stock Exchange tick chart tool. It's a little segment. I'll show you the picture here, put a display up, but it really gives that sort of average on every time a price ticks up in all the New York Stock Exchange stocks, it goes up like one little point. If it goes down, it goes down a point. And when you have, say, a market that's really rallying, like, we're up like 200-300 points in the Dow, that tick should be constantly up. So when it drips back, it doesn't mean the market's crashing. It just means that maybe little profit takers, little pullbacks. So what I do is I have this sort of whack-a-mole strategy, and whack-a-mole is that little game you see in by the beaches where that thing pops up and you have a hammer and you're constantly whacking it and different like that. Every time that tick moves down, it's whack-a-mole time. I'm scalping, entering, and then getting rid of it at when it bounces. So those whack-a-moles aren't the market's crashing. It's just taking advantage of these little downswings. We see a lot of these in the equities now too, where it sort of seems to be an up day every day. I'm just going to take advantage of those little pocket pops.
That's a tool that most traders wouldn't think of using for that. They wouldn't kind of use a tool. It's not like one of the main tools people use.
Yeah, I mean, everybody's looking at moving averages and what comes with their package. But to me, that's a tool that I, usually what's the topic of our subject? What's the ones that we can't live without? I got to tell you, I'd have a tough time because living without this one. Because not only does it tell me that it's a sale at the store, basically, so I'm going to buy at discount, but it's also doing it. It's not crashing. I'm not doing this a minute after a big news announcement and the market drops like 50 points. It's these little pockets of just pullbacks, profit takers. All right, I'm going to hit that button and take advantage of it. This is generally a scalper's game. It's not really a long-term swing type thing, but it gives me a good entry. And in scalping, entry is everything.
What's another tool you can live without, or another setup that you cannot live without?
Yeah, there's another. Actually, I'll give you a strategy. How's that? It's using New York Stock Exchange tick, but not necessarily. But if the market's up, say on a really big day, which seems like every day is the case, all right, look at your advanced decline line, advanced decline ratio. You'll see it. Most packages have it. ADD, it's called, or dollar AD, and just advanced decline. It takes the total number of advancers on the New York Stock Exchange and divides by the number of decliners, right? When that number is extremely high, don't start shorting it. What you're looking for is just going long only, but looking for pockets of opportunity. So that combination of a strong advanced decline, which means market's really, really strong, and it's just going to kind of have that positive drift all day. Wait for those little pockets on the New York Stock Exchange ticks to go to like, say, minus 200 or something, and just, what did I say, whack-a-mole. Like, that's all I'll do all day. And I don't scalp every day, but those are the days, people say, do you scalp or do you swing trade? Those are the days where the market's telling me, scalp till my hands bleed. So that advanced decline, it's got to be an extreme. And by the way, it works the same way as shorts. If it's really negative, don't expect reversals. And if it reverses, that's fine. You can stop out. But take advantage of those little pops. If you're new to scalping, it's a great intro to scalping as opposed to using moving averages.
You wouldn't be able to do the same thing with the Forex, so no?
No, because it's a lot of it's volume-based, and New York Stock Exchange tick data is based on the New York Stock Exchange stocks. So it is somewhat limited. But I use in the S&P index. I can use in ETS. I can use in the futures. And also, if you have sort of big cap stocks, now I like NVIDIA, Apple, kind of work itself like an index. It's great. I've used it this year in my scalping of NVIDIA, which is good, but can't say it's great because it goes up every day. So, can't say I'm a hero. But that played a big role in getting a little more meat off the bone, And NVIDIA, a little more meat is what, 3 or 4 points?
I know you guys are going to want to see how that works in the chart because that's what we're here all for after all. So we'll put a link below. Michael will teach you exactly how this works out in the chart. You can have a look at how he's trading, the strategy behind it too, and kind of see this more on the applicable perspective on the chart. So link below for that. It's going to be a free video, free training on that. We can go more in depth on that than on YouTube because people don't care about the in-depth stuff on YouTube that much. So check this out. But any other kind of last words or last advice on how to trade this breakout?
The general concept is I have found, and I know a lot of breakout traders, they do really well. Etienne, it's all about risk management and discipline. Doesn't matter what strategy, you have to have those two components. So if you're sort of a breakout trader, I think we're talking to you is come think about joining us on the other side. There's a lot of opportunity there and great risk management because you know when you're wrong, right? And the breakout sometimes by the time you get there and it has to wait till the point, you're wrong, you're kind of in the hole already. So look at this as a second arsenal in your attack. So it's particularly for you scalpers, breakout traders, come join me on the side. Click on the link below. I'll show you all about it.
That's good. In your experience, what's the ratio of failed breakout compared to breakouts that are working? Is it a 50-50? Is it more like failed and working out? Or
here's my thinking on it. It's probably 50-50. If it's long, it's probably 53% because there's always like a positive drift. But my thinking is this is something that always puzzled me. And again, put your comments. I'd love to hear more about it. Is when people wait for price to get all the way up to the breakout point, okay, and then they enter on the breakout. What about all that opportunity of waiting to go to the breakout point? Wasn't that the trade? So for me, when those traders are buying the breakout, they're actually buying it from me. I'm selling that. I'm selling it to them. That's usually my target 1 or target 2. So then when fade goes up and then it panics, I'm taking the other side again. So it always kind of perplexed me while I'm waiting for the breakout. Well, that was a nice trade if you took the opportunity to do it. So hey, there's plenty of ways to make money in this market.
Something we just talked about offline a few minutes before we got in the video. So we'll do another one on that topic specifically, how to get in early. Have some setups that I use myself to get in first, then I get in later with the trend. We can go more in depth into the next video if you guys want to see that. Make sure to subscribe to see the next video on that. We'll really jump in depth on those factors and those lessons we shared here. So Michael, thank you for this advice. And we'll catch you guys back here in the trending below. And of course in the next video after that. So talk to you soon. Ciao.